This is answer 63. Answer 63. On 31st March 2014, the after the closing of the accounts, the capital accounts of PQ are stored in the books of the firm at 40,000, 30,000, 20,000 respectively. Subsequently, it is discovered that interest on capital at the rate of 5% has been omitted. Profit for the year 2014 amounted to rupees 60,000 and the partners' drawings were 10,000, 7,500, 4,500. The profit sharing ratio of a PQR is 3:2:1. Give necessary adjusting entries. First of all, we have to calculate opening capital as closing capital is given in the question. Interest can be calculated on opening capitals. So, we have to calculate opening capital, working notes, working notes. The partners are P, Q and R. They are P, Q and R. Rupees, rupees, rupees. You have been given closing capital. Closing capital. Closing capital as on 31st March 2014. 40,000, 30,000, 20,000. Add drawings. Drawings are added. Add drawings. 10,000, 7,500 and 4,500. Next is your less net profit. Less net profit, which is 60,000 rupees. 60,000 will be distributed in the ratio for 3:2:1. That is coming to be 30,000, 20,000 and 10,000. Then you will be finding this opening capital. Opening capital. This is your opening capital. Opening capital. 20,000, 17,500 and 14,500. After this, we have to prepare statement showing adjustment. Statement showing adjustment. Showing adjustment. Statement showing adjustment for P, Q and R, all three. Particulars P Q and R. Then farm. This is P Q R farm. Debit, credit, debit, credit, debit, credit. Rupees everywhere. We have omitted interest on capital. The partners have omitted interest on capital, so they will take interest on capital at 5% of the profits. Interest on capital omitted. Interest on capital omitted. 5% is to be credited to them. 20,000's 5%, 1,000, 17,500's 5%, 875, and the last one is 725 on 5% of 17,500. This is 725. And if these three will be added, this will be 2,600 debit. Then net loss for the above. Net loss for the above. Net loss for the above rupees 2,600 in 3:2:1 ratio. That is 1,300 for A. For B it is 867. For C it is 433. 433. Total is 2,600 credit. Now total and find out the net effect. These are the totaling and net effect. Total is 1,300 for P. Debit, credit is 1,000. Q it is 867 and 875. For R it is 433 and 725. It is 2,600 each. And the net effect is 300 debit, 300 debit and 8 credit, and 292 credit. Fair notes journal entry. Fair notes journal entry. Journal entry. date particulars, date particulars, ledger folio, debit rupees, credit rupees. The date will be, in this case, 31st March 2014. 31st March 2014. P's capital account debited to Q's capital account, R's capital account. P's capital account debited to Q's capital account to R's capital account. It is 300, 8 and 292, being interest on capital, capitals omitted, now rectified, yes, simply rectified. Total